Welcome back to the Lance Roberts Show podcast right here at realinvestmentadvice.com. In studio with me today is, of course, Richard Rosso, certified financial planner. A big down day on the markets today. Markets are down 340 points. This is about 1:15 this afternoon. And, of course, the big concerns here is everybody's trying to figure out, what's going on. But we've been talking about this for a while, is that every single time that interest rates climb up above this 3% level, well, we have a correction of some sort. And here we go once again. We had an extremely high level of complacency. Volatility was very low. You had interest rates creeping up. Now, all of a sudden, the band is broken, and everybody's trying to figure out what's happening. So,
we had a big move yesterday. I think that also. But to your point, once you get to this level, everybody starts to wonder, is it the great rotation? Are we going to move from stocks to bonds? See, that was the great rotation. Everybody was talking about the great rotation after the Great Recession. What was that supposed to be, right?
Right.
But based on our demographics, it's to bonds.
Right.
So if you are a bond buyer or a prospective bond buyer, this is not bad news for you. Well, and if you own bonds, I think that's where or bond funds, this is where the perspective needs to come into play as far as yields. And like you said, once they hit this level, we tend to see a bit of a retracement in yields if we're looking at the 10 or the 20-year, right, on the Treasury.
Well, and again, let's keep all this in perspective, too, for just a moment, which is, yes, the market's having a big correction day. It's headline news everywhere. Everybody's very concerned about this. But we're correcting about 1.5% today.
I know.
Off of all-time highs.
Right.
So, really, it's nothing to really worry about. But, of course, when these things happen, it's certainly a big look. Small cap stocks, a good example, have been outperforming, large caps for most of the year. They're on one of the worst tracks right now since the month of June. And it's like, oh, my gosh, it's headline stories everywhere. It sounds like the world's coming to an end. But
why is the divergence, though, with small cap? Is it more of input costs, labor costs? What usually you would think small cap should be prospering here overall? And well, I guess it's about 3 or 4 weeks ago we started to see this pullback in small caps that not many people have been talking about. Compared to large. But what do you think that is?
It's simply a function of two things. As a small business owner, and you're a small business owner, and so
Very
you understand
small.
this, is that the things that impact small business the most are wage costs.
Yes.
You take a look at labor input costs across the board. Those have been rising. And it's not just the fact that people are paying higher wages, because there's no real evidence of real wage growth after inflation. But what things are going up for businesses? Well, the cost of benefits, health care, commodity cost, interest rate cost. All those costs are going up, and all those relate effectively back into labor costs ultimately as well, which, by the way, there is some pressure in labor costs. I'm not going to deny that.
We've seen it in reports from Walmart and other larger companies, but it seems like it's affecting smaller companies.
Well, that's right.
Because they're more vulnerable.
Well, absolutely. Because, if I'm Walmart and I make $50 billion a year, a quarter in revenue, I can afford to have some labor cost issues. But, if I make $100,000 a quarter, all of a sudden a change in labor cost has a much bigger impact.
And we've seen a rise of the Kaiser Foundation came out. They're the nonprofit group that do a lot of healthcare analysis, that healthcare premiums for employers have gone up at least 5%. And employees are shouldering a lot more of the burden. So sooner or later, employees are going to start to feel the pain here as well.
If they haven't already.
Yes.
But, the other side, and you mentioned something a second ago, as bondholders, particularly bond funds. Of course, this is kind of the big highlight today. A lot of people have questions right now. It's like, oh, my bond funds are going down. Interest rates are going to the moon.
It's about the big D, and I don't mean Dallas. Duration.
Yeah.
What's duration, right?
And
interest rate sensitivity, types of funds you own, right?
Exactly. Well, and again, two things to really understand about bonds that we need to cover today, which, first of all, we're going to talk about in a second about where interest rates are currently and what to expect. It's interesting when markets go down in price. The first thing people tell you is stocks are cheap, so you need to go buy stocks because it's cheap. Well, in the bond market, it works exactly the opposite. When interest rates go up, bonds get cheap. And if you're a bond buyer, because you need income and capital preservation for retirement, this is where bonds become much more interesting. And especially when interest rates go up, you can lock in a higher yield. And when you're trying to fund a retirement income stream, this is much more important.
Absolutely.
So if you're a bond buyer, higher rates is actually a good thing for you. You should be happy about it. But, psychologically, we get concerned about this. So the two things we want to talk about today in particular is bonds versus bond funds, right? What is the difference, and, where are we now? So first of all, let's talk about the difference, and particularly when it comes to financial planning. This is the important thing. When you talk to clients, what's the biggest misconception about bonds and portfolios and what people are looking at right now?
Well, people get very motivated by, or their eyes direct to what we call the gain loss. So it's the red and the green of how they manage this. So they look at, hey, my bonds are losing money. They don't understand that it doesn't matter. Right? Because I'm going to collect interest for this period of time, and then I'm going to get my principal back, which is the beauty of owning individual bonds. But they are a drag on the portfolio. So when you look at total portfolio return, it's like my portfolio is going nowhere. Well, how long has it been when bonds and stocks would move together and we all got spoiled?
Right. And it's 30 years.
Yes. And there were times when bonds were appreciating in value. There's lots of green everywhere, okay?
Right.
But now bonds have become the albatross in some ways. So you have to do a deeper dive, take a step back, and understand the dynamics of your individual bonds. And if you own individual bonds and they mature, that's the beautiful thing. I don't have to worry.
Well, and that's a great point, because I was reviewing a portfolio with a client yesterday, and we were talking about the importance of allocation versus the market. So in February of this year, the S&P 500 fell by 10%.
That's right.
Now, there was an interesting conundrum that actually happened in January and February, which normally doesn't happen. Normally, if stocks are rising, you see money coming out of bonds and moving into stocks. So you see interest rates ticking up, but stocks are rising. And so the bonds and stocks kind of balance each other out. We had a really interesting dynamic in February where everything went down at the same time. Stocks fell and interest rates went up, pushing bond prices down.
Unless you just had cash, nothing was working.
But the difference is that even with a good allocated portfolio like you had, the difference was a 10% drawdown versus a 3% drawdown in a 50-50 allocation because of the protection that fixed income gives to a portfolio. So it's important to understand that bonds play a very dynamic role with the capital preservation side of the portfolio. But again, we're talking about individual bonds. When we come back from the break, though, I wanted to take a look at a couple of charts here on interest rates and look at them on a short-term, intermediate, and long-term basis and try to get a picture of, is this a good time to be buying bonds? And if I am buying bonds, should I buy bonds or bond funds? We'll talk about that with Richard Rosso right after the break. I'm your host, Lance Roberts, for the Lance Roberts Podcast right here at realinvestmentadvice.com.
Got a question for Lance later? Ask now at realinvestmentadvice.com.